Trading without knowing about the macroeconomic picture is the same as flying a plane without a radar. So you can see what is in front of you, you can see through the windscreen, let's say the next 400-500 meters, but you can't see that massive plane that is 5 kilometers from you and is approaching you at a high speed and is about to crash into you. In this video, I want to try and teach you how you can connect all of the pieces. So let's say if we're in a risk-on, risk-off market, what is Trump doing? What is the Fed doing? And then have a bias, either a bullish, neutral, or bearish for your trading. An example would be, let's say in the current market environment, you're looking to go long in the US dollar. You saw the technical chart, you saw a level of support, and you think that the dollar is gonna bounce heavily. Well, if you knew anything about the current macroeconomic picture, you would know to stay away from the dollar because it is getting weaker and weaker every single day. The macroeconomic picture is always more powerful than technical analysis and more powerful than fundamental analysis, meaning the economic numbers. As you saw a couple of weeks ago, Trump announced tariffs and the S&P 500 dropped 20%. Doesn't matter that there were some key technical levels of support, we just smashed right through them, and it doesn't matter that we got some good economic numbers out of the US. So let's start with the most simple thing. It's gonna be the risk on or a risk off market. Is the current market environment in risk on or risk off? Risk on means that the investors are very optimistic. You had that happen in stocks right before Trump went into office in January 2025. So generally people are feeling very confident. You're getting some very good economic data. The employment numbers are good. People have some extra cash to spend, and where they put it? Well, they put it in the stock market, which is the most important risk on gauge. So if you see the S&P 500 or the Nasdaq steadily climbing up, steadily reaching all-time highs, you know that this is a clear risk on environment. Let's switch to risk off. What is risk off? Well, this means people are panicking. They are selling risk on assets. And again, the stock market is a great gauge for risk off. That is what we are currently in. You had Trump announcing the tariffs. We quickly went into a risk off environment and people just started selling absolutely everything. So as a general rule, risk on assets we mentioned are stocks. So S&P 500, Nasdaq, and others. Risk off assets are gold and the Japanese yen, which you can also currently see. Gold is absolutely exploding in value, all-time highs. It reached 3.5K recently. Now, when it comes to the US dollar, usually it's actually a risk-off asset. Usually it's a safe haven asset. That means when there's a shit show, people flock into the US dollar and the value goes up. Now you may be thinking to yourself, well, I just opened the charts and the US dollar is losing a lot of value, so how can this be if we are in a risk-off environment? Well, the current shit show is coming out of the United States. It is coming from Trump's new tariff plan. And because of this, investors have decided to sell everything that comes from the United States. So that goes for stocks and it goes for the US dollar. So how you can think about it: when there is a shit show, you should determine where it is coming from. If it's from the United States, the dollar should go down in value. I think in 2008, the dollar also crashed in value. But if a war breaks out, as we saw the Russia-Ukraine war, well then stocks should go down, but dollar should theoretically go up in value, since the crisis is not in the United States, but in this case it was a war in Europe. So the conclusion is that you cannot trade effectively without knowing where the investors are flying into. For example, when you see headlines about a new war and you're heavily long the Nasdaq or heavily long the S&P 500, your position will get smashed. So the first part ties into the second part. The second part is what is happening globally. Are there any wars? Are there any crises? Is there a trade war like we have right now? So currently we still have the Russia-Ukraine war. You have some tensions in the Middle East, and Taiwan is always in the background. So these events impact oil prices, and they heavily impact the defense industry. We had an interesting event recently where Europe decided to pump massive amounts of money into its defense programs, and a lot of stocks from German arms manufacturers actually went up. So you saw the DAX, which is the German stock index, go up in value by a lot when this announcement came out. So when you see a new headline about a new war or a new crisis or a new trade war, you should ask yourself, how does this impact the markets? Is it risk on or is it risk off? What about the oil prices? What about currencies? Will the yen go up or will the Aussie go up? The Australian dollar is also another example of a risk-on asset since Australia heavily relies on commodities. So during COVID 2020, you saw the Australian dollar massively crashing because oil prices went down, and again, Australia is heavily exporting commodities. Now, when you see a breaking news headline, you don't have to do all of the work. There are some really great analysts and traders online that you can listen to and basically implement their analysis into your trading. But I'll mention this a bit later. So just a quick announcement, if you are interested in fundamental analysis in actual raw economic data, the Edgefinder software is currently running a 45% discount. So this software is awesome. It does all the work for you. You do not need to do basically any research or any calculations. It looks at every single fresh economic number, adds all of those numbers up, and gives you a clear bias, either bullish, neutral, or bearish on the specific asset that you're looking at. I personally use the Edgefinder every single day, and with the Edgefinder I was able to get in on a gold buy recently, and it is currently running at around 5% profit. So the link will be in the description of this video, and make sure to use the code MARKO for 45% off. Okay, so the third thing that you need to ask yourself is, what is the Fed doing? So what is the central bank of the United States doing? The US dollar and the US economy is the most important and the biggest in the world. Gold is quoted in dollars, oil is quoted in dollars, and pretty much the whole world runs on US dollars. So you need to know what's happening there, no matter what you're trading. If you're trading stocks, if you're trading gold, if you're trading currencies, if you're trading oil, every single thing is impacted by the strength or weakness of the US dollar. And the Fed controls the value of the US dollar. It is all in the interest rates. So if the interest rates are going up, meaning the Fed is hawkish, the value of the US dollar should go up as well. The Fed raises interest rates in order to battle inflation, okay? So when the inflation is high, the Fed raises interest rates, and that raises the value of the US dollar, and it contracts the economy because loans are more expensive. If the Fed is lowering interest rates, meaning they are dovish, that means the value of the US dollar should go down. The reason why the Fed would want to lower interest rates is to make loans cheaper, and it is to stimulate economic growth. A Fed meeting or a speech from Jerome Powell is currently the head of the Fed, can really move the markets. Those events are usually the most volatile, and they can really shift the macroeconomic picture. Let me give you an example from what is happening right now. So Trump wants low interest rates. He wants a weak US dollar. He wants cheap loans in order to attract investment and in order to expand the US economy. But Jerome Powell recently had a speech, and he mentioned that the Fed is actually worried about inflation because these new tariffs can bring a lot of inflation. And what that means is possible higher interest rates in order to battle inflation. Now, the stock market really did not like Powell's latest speech, and it again sold off because if the Fed raises interest rates, that means the economy contracts. That is bearish for the stock market. So you should keep track of what the Fed is doing. If you're ignoring the Fed, if you're not reading up on their meetings or on Powell's speeches, well, then you can very easily get blindsided. The fourth part of your macroeconomic analysis should involve a little bit of politics. Now, I know a lot of people hate politics. They don't want to get into it, but if you're a trader, it concerns you. No matter what you're trading, if Trump comes out and puts a 500% tariff on every single country, you're gonna see that in the charts. So this is something you can very easily read up online. There's a lot of great writers, great analysts, great traders posting their analysis of the current president and analyzing what his actions will look like in the markets. Currently, we have President Trump. He wants a weaker dollar, he wants lower interest rates to attract investment, and he wants massive tariffs. A big problem that traders and investors have is that they trade according to their political beliefs. So some traders like Trump, some traders like Biden. So they are very subjective. That's a very bad way to go in trading. You need to be very, very objective. What I recommend is go online, find some traders that you respect, find some traders with a good track record so they can prove to you that they are successful, and see what they are saying about the current president. It doesn't matter if he is a good president or not. It only matters how his actions impact the markets. Because we're not here to discuss politics, we're here to make money in the markets. So put your political beliefs aside, try to objectively look at the situation and make a decision. Is the current president bullish for the stock market, meaning is he risk on, or are his actions bearish for the stock market? What is the current situation? Well, of course, President Trump, lots of tariffs, that is bearish for the stock market, and it produces a risk off environment. And actually a similar thing happened back in 2018 when Trump was in office and he announced tariffs. It did produce some problems for global trade. So if you did some research into Trump's first term, you would have known that he's heavy for tariffs and that those tariffs are not the best for the markets. For the last part, meaning part 5, I want to discuss what are your resources? Where are you getting your news? Which traders or investors can help you to paint an accurate macroeconomic picture? This is again very important because if you listen to wrong people, if you listen to perma bears or perma bulls, if you listen to Jim Cramer, you will get burned a lot and you will have a lot of losing trades. The two platforms that I personally like the most, that's gonna be YouTube and it's gonna be Twitter. On YouTube, Trader Nick does a daily breakdown of the macroeconomic picture, so definitely watch that, it's awesome. And it is gonna give you a clear, unbiased opinion of what is going on in the world, what is going on with the macroeconomic picture, and how is it impacting every single market, meaning stocks, gold, currencies, commodities, and others. Twitter is great. There's a lot of smart people, a lot of very successful traders on there, but there's a lot of shit as well. So you really need to filter out the good from the bad. Some accounts that I personally recommend, that's gonna be Vukovic. He also has a newsletter where he breaks down the macroeconomic picture every single week. That is definitely a must read. All of the information is gonna be on his Twitter account. You have Brent Donnelly, who wrote the book The Alpha Trader, and he made I think $50 million in just 1 year of trading. So he has some really good stuff. And also you have the account that's called Trump Posts from Truth Social. Now that is nothing fancy. It is just an account that reposts his posts from his social media platform. So Trump's posts are known to move the markets a lot. A great example happened, I think, 2 weeks ago when he decided to put a 90-day pause and he announced it on his Truth Social account. And that 90-day pause on tariffs actually created a massive bull run in the stock market. It was brief, but in that moment, stocks went up heavily and it was risk on for a couple of hours. So Trader Nick, Vukovic, Brent Donnelly, and Donald Trump's posts. I will link everything in the description of this video, so definitely check it out. The conclusion would be is once you do this analysis, so once you take a look at risk on, risk off. Who is the current president of the United States? What is the Fed doing? Are there any wars? Is there a crisis in the world? What about a trade war? Are there any tariffs? Is the current market environment risk on or is it risk off? Once you understand all of this and you paint the picture, well, then you stop trading in the dark. You then understand which assets are in play, which assets are expected to be volatile, which assets are leaning bullish, which are neutral, and which of them are leaning bearish. It basically tells you where the smart money is going. Right now, it is risk off. You have some big problems in the United States. That means bearish for the stock market, bearish for the US dollar because it's happening in the United States, bullish for gold, and bullish for the Japanese yen. Crypto is very interesting because Bitcoin has not dropped much. Usually Bitcoin is connected with the stock market, so it's usually a risk on asset, but right now it is steadily holding its value, actually going up a little bit, so we will see what will happen with crypto. So if you do this analysis and if you can match your trades to the macro picture, well, you give yourself an edge that most retail traders don't even think about. That would be about it for this video. If something is unclear or you have something to add, make sure you put it in the comment section. So everyone does their macroeconomic analysis a bit differently. So if you have a different style or a different way of doing it, I would be very interested interested to hear about it, make sure to put it in the comment section. I'm always looking to learn more and improve my trading edge. And I also want to mention that reading the macroeconomic picture is not that hard. So once you get into it, once you study it a bit, once you know who to listen to, what to read online, well, then it gets pretty easy. And once you implement it into your live trading, well, then your trading edge drastically goes up. And that is what separates you from the retail traders who, of course, lose most of the time, and now you are trading like a professional. So if you want to learn how to trade, make sure you check out zentumtrading.com. There will be a link in the description of this video. You have free mentors at your disposal. There is Nico, Griff, and me. Our goal is to take you from zero to becoming a consistently profitable trader. Thank you guys very much for watching, and I will see you in the next video.